All right, Jay, maybe we can start.
Sure.
Hello.
You can hear me, right?
Yeah, now I can. Great. All right. So once again, a very warm welcome to all of you. I am Radhika. I handle customer experience and program at InCred Wealth. Thank you so much for joining us for our session today, exclusively organized with InCred Research and InCred Equities, to, of course, touch about one of the most talked about subjects in recent times, and that's China. With us, we have Mr. Jay Shankar, and a quick introduction of Jay. Jay is the head of economics research at InCred Equities. He's an experienced economist with a demonstrated and diverse history of working in the private, government, and development sector. He comes with over 15 years of experience in economic research and analysis, economic forecasting, public finance, corporate finance, value for money analysis, cost benefit analysis, public policy research, and econometrics. Prior to joining InCred, Jay was the chief economist and director at Religare. He also served on leadership roles across organizations like Department for International Development, Edelweiss Financial Services, Adventity Global Services, as well as Infosys. He holds a PhD in economics from Center for Economic Studies and Planning at JNU and a bachelor's degree in economics from Delhi University. So that is about Jay. And over to you, Jay, to take us through all that's happening in China, from the power crisis to the Evergrande issue and to its role in international trade, of course. So over to you, Jay. Thank you. Sorry, in terms of the format, Jay will be talking for around maybe 20 to 30 minutes, and we'll take a lot of questions as we move along. Over to you, Jay. Thank you.
Thank you, Radhika. Thanks a lot. And well, a warm welcome to all the participants. As Radhika said, we would first discuss about what is happening in China and why is it happening, and try to go slightly deeper into history to explain the broader reasons of the clampdown and the so-called political rebalancing which is happening, political and economic rebalancing, and then also answer some questions around its likely success, its likely, for lack of better word, the success of the entire the re-emergence of China as the global power as per the China Vision 2030. So we did publish a report in the month of August early August to be precise, and that was a culmination of in fact, a series of talks that we have been conducting on our research platform. And we had hosted an academic in one of the Chinese university who is a professor of international relations and politics at a university in China, and is a very good friend. And he was visiting Delhi, and we had a very detailed chat and discussion on several issues, because back in August as well, China was very hot topic, so to speak, and we did discuss the rationale reasons. So not much has changed since that discussion and the report that we brought out. But there's a new thing which I myself had missed out in my report, which I will try and discuss in detail. So when we discuss China in terms of its recent clampdown in several select sectors, be it the polluting sectors, be it edtech, be it the games companies, or be it the reality companies, we usually tend to focus on the visible political economy, which is President Xi Jinping's so-called control freak nature to consolidate power, and relate that with the the all important Politburo meeting, which is happening next year. So the notion is that he wants to demonstrate that he is the supreme leader, unchallenged and unquestioned, and that's the reason why the recent assertiveness, if you like, in its foreign policy, in its border policy, in its territorial policies, and of course, economic policies. So it's like telling the companies from the West that my way or the highway. So you deal with the new rules which I'm making, or I don't care. But if you delve a little deeper into history, and there is one person uh, whose name is often missed in this entire analysis, and that person's role is as old as the Chinese reform movement since 1990s. So that person defines, and that person is the intellectual ideologue of the CPC, which is the Chinese Communist Party, CCP. And so we often miss this person because very little is known about this person, and this person is prefers to remain under the radar, and is barely given any interviews. Very little is known about his past, especially to the Western analysts. So let me highlight his coming into the political spectrum of China itself in early 1990s, when he was basically an academician. His name is Huning, and he happens to be, well, people consider him as number two or number three in the entire power structure in China. The important point here is that he has served the Chinese Politburo, which is the the highest decision making body. Within that body also you have a 7-member team, and he is one of them, and he has served 3 presidents, uh, from the previous president, and the president who preceded him, both although they have a faction in the Politburo itself. So be it the Jiang Zemin times, or be it the Hu Tao times, he has served the 3 presidency, and that's something which is nothing sort of a miracle, because the faction which supported the earlier 2 presidents have been sidelined by the current dispensation, which is Xi Jinping. So he has survived those 3 presidencies spread over almost 30 years. And his ideology, which was published way back in 1980s and early 90s, by the way, immediately after getting inducted into the Politburo, he kind of became a very recluse and completely cut off from his earlier contacts. And in fact, he chose not to speak to the media, and definitely not to foreign media. And he has been very, very, introvert since then, has hardly published any paper. In fact, nothing. He's never written anything anywhere in formal or social media after his induction in 1990, early 1990s, somewhere around 1992. Now, if you go through what he has been writing before his induction into the Politburo, that kind of gives you a glimpse of what is happening now. And that perhaps explains and gives a kind of further reading into the minds of the Chinese policymakers in terms of what they intend to achieve, and what is the agenda. So, in clear and short and crisp terms, uh, if I may use the word transformation, they want to transform the so-called liberal ideology of the Western world into back into the Chinese version of communism with a twist in terms of Chinese influence, and go back to the value systems and go back to the the family systems of the erstwhile historical China. So that's the historical uh, antecedent of what his beliefs are. He believed, in fact, throughout the first and the second two presidency, that the liberal views from the West may actually do some good to China, and he kind of tried and experimented that. But there, I think he realized that the Chinese economy is, in fact, getting much closer to, and in certain aspects, overshooting the negative connotations of liberal democracy, which he had identified way back in 1988, if I'm not wrong, in his book America versus America. So there he has clearly articulated the kind of uh, the kind of decay in social value systems which uh, probably we in the Western society are facing. Now, whatever I am saying, I am not giving any value judgment from my side, whether this is correct or this is wrong. I'm just reading from some of his writings, and based on discussions with friends and colleagues working on China, be it in the Chinese university or be it in IDSA in India. So he's thinking of the decay in social value systems is something which is inimical and which is not conducive to uh, the social and political control that they want to maintain over a much longer period of time. So obviously there is a fear, and it is clearly stated in some of the recent writings of official Chinese media, that they would like to avoid the repeat of what happened in Russia, and also what has happened of late in the Western world, where the inequality has increased so significantly. In fact, in China, the Gini coefficient is roughly, I think, 0.47. In fact, more than the Gini coefficient in sorry, less than that in the US, saying signifying that the inequality in China is far worse than the inequality in the US. So they would want to retrace back some of the quote unquote negative effects of liberal democratic ideas, or broadly speaking, liberal social values and economic values, uh, in order to be able to thwart the so-called decay, which eventually is his prediction for the Western economy and the Western society. So that's at the core and heart of why and what is this is driving the changes which are happening. So if you look at the Chinese economy, they have tried, and this is not just China, but many Western countries, many developed countries have of late experienced fertility rate in terms of demographic, which is below the replacement rate, and that endangers the future possibilities of future growth rates. And China is not alone. Several countries have given different kind of incentives. China has also of late incentivized families and people, couples, to have more children, but they have not been able to be, they have not really been successful in their endeavors. What it means is that, uh, and why they have not been successful is perhaps also the reason why they are doing this clamp down on certain select sectors. So, for example, uh, of late, there is a large mass movement of people from the rural areas, the youth, to find employment in the urban centers. And what that has led to is a huge amount of asset bubbles in the real estate sector. Similarly, the prices of some of the essential commodities for essential goods and services, for example, for raising kids, have shot up beyond what the average Chinese can afford to. So, for example, almost 600 million Chinese people still survive on not more than $5 a day, and roughly about $155 a month. So that's the kind of inequality that we the Chinese have experienced since the opening up of the economy to private sector, to Western investments. And what that has also led to is something very important for maintaining that fertility rate, that the Chinese people simply are not interested in having more than one kids. In fact, many couples prefer to stay without kids because of several social as well as cultural reasons of late, because of modern thinking. Now, uh, what has happened to the real estate sector or to education sector, because education has become clearly unaffordable, uh, to educate this entire life cycle of 10 year or 11 year or 12 years of education for kids. It is costing roughly about 7 times to around 25 times annual salary of an average Chinese person. So that has become unaffordable, and that's the reason why the government has clamped down or put a ceiling on several sectors, and has made the real estate sector also has responded by making real estate sector in a way that the prices of real estate go down, so that it becomes much more affordable, both real estate as well as education sector. Um, Now, if you look at the recent episodes of be it Evergrande or be it over leveraging, which has been observed in some of the Chinese sectors, the clear in the clear mandate, or not mandate, but the clear thought process from the Chinese political authorities is that we need to reduce the amount of leverage, we need to reduce the amount of asset bubbles, we need to reduce the prices, and we need to make the society much more egalitarian, so to speak. And the term that they are using is common prosperity. So that's something which I think, to my mind, will drive Chinese, economic policy making and business decision making, at least from the government side, from the policymaker side, for the foreseeable future, because uh, what they have realized is that they have already achieved a critical mass over the last 15 to 20 years of private sector participation. So right now, the $10,000 per capita income, which is the per capita income of China, they would like to double that in the next 10 years, in by 2030 to 2035. And the run rate of aggregate GDP growth for that kind of doubling of the per capita income would be in the range of 4.5 to 5%. The Chinese policymakers are very much confident of being able to achieve that kind of growth rate. However, I think to my mind that may not be possible, and at most on a sustainable basis, China can grow at roughly about 3% uh, consecutively on an average for the next 15 years until that China's Vision 2035 is realized. In terms of some of the after effects of this clampdown, well, a lot of companies have started diversifying their supply chains because of the inherent and high risk that they have seen, especially during COVID times. And they have, in fact, started looking out to other South Asian and Southeast Asian countries. And India has benefited not because of purely because of China Plus and the companies moving out, but because of its own attractiveness for investment, because of the large market that it provides, because of the large unpenetrated market for various kind of goods and services. Earlier, what used to happen was that the manufacturing used to happen in the global value chain in across Southeast Asian countries. Right now, the focus for many companies, many global players is to kind of move out as much of possible the key strategic inputs in their manufacture out of China and relocate it to other neighboring countries, and especially to countries which are already there in the global value chain. So there, I think India faces some challenges because many of these, the Southeast Asian countries, countries like Vietnam, countries like Indonesia, or even Bangladesh, because they are pretty much well entangled into the textile value chain. They have had a kind of a first mover advantage, being already in the value chain, and it's easier for the global players to relocate to those locations because of pre-existing manufacturing facilities, part of their value chain already existing in those economies. India will have to make its own case for attracting this China plus companies which are coming out of China. So the companies who are likely to come, or who have come and who are already coming to India, are not coming because of moving out of China, but more because of India's inherent and intrinsic attractiveness. So I would stop here and we can take questions from here on.
Sure, Jay. So we have a few questions already. The first one is in India, a lot of small businesses which were dependent on China for supply are kind of dead. So this at one end, and the ever expanding valuations of the market on the other end, how does it impact the fundamentals of our country?
I think there's a huge opportunity in India for import substitution from the channels and the value chains which were existing earlier. So India used to, and India continues to, import a lot from countries like China and other countries. And I think there is a huge, for example, I can take the example of chemicals itself. And we recently brought out a note where we are saying that the kind of opportunities that exist in the potential import substitution for chemicals is so significant that the manufacturers, in fact, just need to put in and pool together the key resources and start manufacturing here. Now, the government's recent initiative in terms of PLIs would go a long way in aiding that effort. So to answer the question, the valuations, I think that's something which I won't be comfortable answering, because valuations are a factor of are decided by a lot of factors, and most important right now is liquidity.
Thanks, Jay. The next question is, since you've mentioned real estate, is a subprime kind of situation about to happen in China? And is that going to impact real estate in other parts of the world, specifically India?
One thing I think we need to also be cognizant of is, and as I mentioned earlier, the demographic changes which have happened in China and many of the developed countries. One thing we need to be sure that if any country which can serve as an example of successfully kind of uh, converting its demographic uh, well, for lack of better word, curse of late into a dividend, it is China, because they know how to you know plan and execute, and being a country which has demonstrated in the past its ability to you know undertake tough decisions. So the incentives which the Chinese authorities have given to the Chinese people at large will take some time to kind of take its effect. Now, the situation had become so bad in China, the one child policy, that this friend of mine was telling me that wealthy Chinese, when they used to travel on a flight, they used to travel separately in different flights, for the fear that if the flight crashes, then who will take care of the enormous amount of wealth that they have accumulated. So that's something anecdotal, but what it tells you is that the Chinese are very serious in converting the demographic curse, so to speak, of late, which they have gone into a dividend by increasing the fertility rate beyond replacement rate. So to that extent, I don't think uh, so that was a slight digression, but I don't think China has any semblance or resemblance of the subprime crisis as of now. Now they have shown resolve, and they are capable of taking care of the fallout of Evergrande.
Thank you, Jay. Um, the next question, why are metal prices rising so fast? Um,
Well, there are multiple factors. So the most important factor, and metal prices are rising fast not because of huge upsurge in demand vis-a-vis the pre-COVID level. It's just that there is a mismatch between demand and supply, and the supplies have during the COVID times, the supplies had declined significantly for most of the metal outputs because of obvious reasons, because nobody had thought that there would be such a sharp V-shaped kind of a recovery at the beginning, at least not in the first couple of months. Now what is happening is there's a lot of logistic and shipping issues which have cropped up. So if you look at the shipping cost itself, in many sectors it has doubled, tripled, and quadrupled in terms of per tonnage rates. So the outcome is that many of the ships which are lying anchored, be it on the port of Los Angeles, or be it on some of the famous ports, the key ports in the US, because there is a bunching up of demand, and suddenly because of a huge comeback of demand, uh, not to any significantly higher level than the pre-pandemic level, but just retracing the demand. So that's the impact of a pandemic, and this was observed even in the earlier pandemics in early decades of the last century. So what has happened is that of late there is a supply demand mismatch, and of course uh, China factor is there, because China plays a big role in metal demand globally, and China kind of the economic activity in China influences price movements of metals across the world. Now, because China has slowed down, is slowing down, one would have expected that the prices would come down, but there is also a clampdown on some of the so-called high energy consuming and polluting sectors, which happens typically to be mostly metal sectors, by the government, by the Chinese authorities, and they have kind of cut production. And of late, because of again logistic issues, power crisis is being witnessed in China, and that has also led to production cuts. So that reduces the supply going to the global market. And as I mentioned, there's a sudden surge or comeback of demand which happened because of the relaxation post COVID second wave, and that led to a temporary or a short-term mismatch in prices of most of the metals.
Thanks, Jay. I think that answers. I'll request anyone who has any questions can use the chat box or the Q&A box, or just raise your hand and we'll unmute you to ask your question. We have a few more questions here, Jay. Um, the next is global businesses migrating to India instead of China. Do you see this as a long-term trend, or will China keep its Asian leadership position?
I think the Chinese authorities are playing a much longer term gamble. And to my mind, in the next 10 years, China will become the biggest economy in terms of size, uh, larger than the US. If it continues to grow at even say 3.5 to 4% for the next one decade. So, to my mind, I think China is already, achieved a critical mass. Now, what they are trying to do is they are focusing on distribution, because of the huge amount of surge in inequality that we have seen in the last 1.5 to 2 decades in China. The focus right now would, to my mind, is on redistribution and improving uh, the uh, the 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 equality quotient of the Chinese economy and the Chinese public, in an effort to kind of wield greater control, greater political and social control, because the Chinese authorities are very wary of a repeat of what happened, as I mentioned earlier, of what happened in Russia, or for that matter, even the Tiananmen Square episode of earlier 1990s, 1991 or 92 to be, if I'm not wrong. So they see that if they keep this wave of Western liberalism coming in and further accentuating the imbalances, be it in terms of economic inequality, be it in terms of regional inequality, or or in terms of social inequality. They would like to reduce those inequalities for a much longer term vision of having a complete control on social and polity of China. So to your question, global businesses migrating to India instead of China. I think the businesses who have gone to China, they would not really want to pull out of China completely. One, because of the huge amount of investment which have already committed and done there, but also they understand that there is a huge market over there and they simply cannot afford to miss the opportunity. So they would try and de-risk their global operations, but they would not completely pull out of China. So will that be beneficial for India? As I mentioned, the benefit for India from China Plus may not be directly as large. So the companies may not shift out of China and relocate to India just because they have to shift out from China, but they would come on their own because of India's attractiveness or the lack of it, depending on which sectors they are coming into. But to my mind, because India now offers a tremendous amount of potential for foreign investors to come in, be it policy making, be it the proactiveness of policymakers, companies are finding it slowly and slowly more attractive to put up their bases in India and treat India as a export base for at least other Asian countries. So earlier, it used to happen that the companies used to treat China as a global base and export the Chinese products that they manufacture to the rest of the world. At least for India, at least for Asia, I think India can provide them a large amount of production export base because of also its geographical advantage.
Thanks, Jay. The next question is, when can we see a normalization in container or fall in the prices in freight prices in a near term?
Well, I guess I had a crystal ball to gaze into, but from whatever I hear and read, and from whatever I gather from talking to people in the in different geographies of the world, my sense is that it will not go away in a quarter or two. So probably we'll have to live with this container shortages for a slightly longer, maybe until the winters of 2022 next year. So probably we are looking at least 3 to 4 quarters of continued logistic related disruptions and the freight rates remaining elevated for at least 6 months.
Thank you. The next question is, which industries in India may benefit because of this slowdown or clampdown of various sectors in China? Are there specific industries you would say?
Well, one clear, industry which kind of stands out is chemical industry, because there's a lot of clampdown on so-called polluting industries in China and in other parts of the world. We do have large, vast areas which are kind of fallow lands, and we can be deploying, using those land for setting up chemical factories. The other sector where I see, great potential is electronics, and even the lower end of the value chain would be a great place to start with. So we had a call, in the month of September with the ex-Commerce Secretary, Government of India, and we discussed some of these issues. So one thing which came out clearly was that we can, in fact, attract a lot of investments, not necessarily from China Plus perspective, but otherwise also into the lower value and lower end of the value chain, in terms of, say, for example, assembly itself of mobile phones or LED TV making, or ACs, and we are actually doing that, and we are doing good in that. And it is only a matter of time that the folks who have set up plants in these sectors will start seeing value and start backward integration into and start manufacturing the key components as well in India. So there also the continued policy support from policymakers in India, namely in terms of PLI schemes, I think that would be very helpful. So yeah, so electronics seems to be very much a sector where India can and India has had a lot of potential. And in terms of software, so even in electronics, there's a lot of software which goes into it. So there also, I think India has a lot of potential. Besides that, we can be looking at select sectors in technology also. Although the India will need to uh, uh, push up its investments, or not investment. India will need to add significantly to the R&D expenditure in the country, both in the public as well as in the private sector, because that's something where India lags behind many of the developed countries, and certainly behind China. Because if you do invest in R&D, both in the public as well as in the private space, then that leads to a lot of forward and backward linkages, and also improves productivity, and that can attract a lot of investments. And on top of that, you would also need to move up uh, the 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 ratings in terms of IPR, intellectual property rights. So we have done a lot. We are better than many of the competition, but on at least on R&D, I think we need to pull up our socks sooner the better.
Thanks, Jay. So since you're on the subject of industries and sectors, I think there's one related question is to what extent India stands to benefit in API and pharma companies from the China Plus One?
So that's a very good question, and we have been trying to, in fact, get a sense of how much we can do in terms of import substitution. And our sense is that, again, there is a lot of opportunities which are in terms of is low hanging fruits in that sector. So to the extent that we are in a sense, we have a lot of talent, we have a lot of knowledge base in pharmaceuticals as well as in API, and we just need to kind of put them together and put a policy which promotes proactively adoption of the existing technologies and innovations, so that companies who are the global players in these two in API and health and in pharmaceuticals find it attractive enough to come and invest in India, and treat it as a manufacturing and export base for the larger world. Because this is one sector which is a lot of innovation and talent driven, and that is abundantly available in our country. So I see a lot of opportunities, and I would put it in the top 5 low hanging fruits, so to speak, in terms of the sectors in which investments can come in.
Great. One question, a little different, is on pollution, right? So is the clampdown in China against pollution, you think, more temporary in nature because of the Winter Olympics, or are they serious about curbing it at the cost of industrial growth in the long term?
So as I mentioned, if you go back to some of the writings of this so-called the intellectual ideologue of Communist Party, and he is now given the status of you know uh, the the wise hermit for emperor in Chinese history. So he is the guy who does a lot of these thinking and policy decisions. Now, if you go and look at his writings and try and read his mind, what he's saying is basically that uh, the Western concept of modernism, the Western concept of uh, you know uh, economic policy or neoliberalism, so to speak, has inherent contradictions, and that those contradictions lead to what we call decay and all sorts of negative outcomes, and pollution is one of them. So if we believe that he is on a much longer term uh, plank of say couple of decades, if not century, then probably we are looking at China, which wants to revert back uh, some of uh, the opening up that it did, and allowing the Western concept of neoliberal policies, and having achieved a critical economic mass. Now they think at least they can afford to uh, be on so-called good side of economic history, be it better distribution of wealth, be it better and cleaner technology, be it better and cleaner methods of production. And I think if that's the driving force behind this clampdown on polluting industries. Now it is coincidental that the Olympics is also coming, and that might have been the we used to read in our uh, school time text that what was the immediate cause. So that may be the immediate cause for the clampdown, but I think that is going to sustain over a much longer period, because they would want a society which reflects their ancient tradition, in ancient value systems, and undo some of the excesses of the Western world.
Thanks, Jay. One question is the situation in China has an impact on the US markets. So, will this in turn affect the Indian stock markets? Do you want to comment on the markets?
Indian stock market or US stock market?
So, it was saying that it has an impact on the US markets, and so will it in turn have an impact on you?
So, we are in a globalized world, so no doubts about it, and no arguments about it. So, uh, the day Chinese policymakers take a decision, so the central bank PBOC takes a decision on credit policy, it does impact, right? It does impact the currency markets. It does impact uh, the uh, the energy markets, and so on and so forth. So obviously there will be impact, but I don't see a hard landing, so to speak, in China. So China can manage and has demonstrated its ability to manage a kind of a gradual slowdown of the economy without really creating chaos, so to speak. If at all that happens, what we are fearing, that will be not because of China, but that will be because of excesses in other parts of the world.
Thanks, Jay. One more question, I think a counter question to the sector discussion we had. Could you give any brief on which sectors will always be driven by China for a longer term horizon? So where China can't be replaced, so to say.
Well, that's a very interesting but very difficult question to answer, because China itself is taken a very conscious call to move up the value chain, and it is kind of vacating. And it's not recent; it's happening the last at least 5, 6, 7 years. So it's vacating the lower end of the value chain and moving up the value chain. So the kind of investment which China or Chinese policymakers have facilitated in the last 1 decade, I think they are looking at a much larger game. They are, not, concerned about the slowdown in economic growth from say 6, 7, 8% to say 3, 4%, because they think that even that growth rate is quite commendable, and that growth rate kind of would enable them to achieve their larger goal, which is basically political and social stability. Because for them, that is much more important, and the rest of the policies, be it economic or be it manufacturing or be it export policy, they are all subservient to their larger, the political, outcomes. So, the three pillars which which defines China's decisions across all spectrums are, uh, you know, nationalism, you know, uh, being able to kind of defend the borders, and also obviously the common prosperity which is now come up. Now, nationalism was never kind of a pillar very prominent in Chinese thinking. It has sprung up only of late, and that is why we are seeing a kind of a much more assertive foreign policy of late. So just to come back to a question, this is a slight digression. What was the question, Radhika, if you can repeat that?
Yeah, the question was which are the industries or sectors where China
Yes.
can't be replaced? Yeah.
Yes. So that's looking too much into the crystal ball, because China will continue to dominate almost all the sectors in manufacturing, wherever it has had a competitive advantage. The only thing is that it will move up the value chain, vacating the lower end of the value chain for the other Asian countries to kind of absorb. So, and that is, to my mind, kind of a voluntary kind of a move. It's not that they have been forced to. So they are carefully planning that out, and try and get much more value added out of their export. So during the study on exports, in India and major economies, the one thing which came out very distinctively was that across the countries which have used exports as a growth engine, we have seen the domestic value added, which is DVA, and which is a concept which is opposite of import intensity. So the domestic value added content of the countries which have used exports as an engine of growth have uh, almost unanimously declined over time, and China has been an exception. So one way to kind of explain why China is an exception is this. So if you look at, for example, I can't show you the chart, but I can tell you that of all the exports that, for example, Japan does of electronics, the domestic value add content is not more than 40 to 45%. Earlier, it used to be around 60%. So what the global value chain system has made it possible for countries is to be a part or be a small part of the entire value chain, and not be required to produce the entire thing, and grow that part, that pie itself, in terms of its exports. So the choices before, and this is a slight digression, won't take more than a few minutes. The choices which nations need to make is whether you want to uh, focus more on increasing your domestic value add content, or you want to increase the pie of the size of your exports. And what most of these, not most, but all the successful countries who have been successful in uh, in uh, uh, in using exports as a growth engine, what they have done is that they have allowed their domestic value added content to decline, but at the same time simultaneously increase the size of the export pie significantly, much significantly, be it Korea, be it Germany, be it Japan, be it Vietnam. All these economies have demonstrated that. Now China is an exception, because the Chinese case, we see that the domestic value added actually has increased, and that's because of late, and that would have not happened the case of late if China had not taken a conscious decision to kind of move up the value chain and do a huge amount of investment in R&D, be it technology, frontiers of technology, be it AI, be it EVs. They have done tremendous amount of investments, and that's showing up now. So to answer your question, which sector will continue to be impacted or be dependent on China, I think perhaps almost all of manufacturing.
It was very interesting, Jay. The one more question which we have is the Chinese government holds huge volumes of US treasuries and corporate bonds. How would the situation be used by Chinese investors or government to put pressure on the US economy?
So that's something which is
Sorry, he's also added that China understands well that it can disturb the rally in the US markets by taking inflation high globally through commodities, etc. And that in turn could hurt US badly. Does this theory have any relevance? I think your smile says it.
I think this conspiracy theory is probably at least 2 decades old, at least not, if not 2 decades, at least a decade old, that China has a lot of, and there's no denying the fact that China does have a lot of bargaining power because of its huge amount of reserves. And on and off, China has been saying that they would like the yuan to become a global currency. And the moment such an announcement comes, we see a reaction in other major currencies, including the dollar. So of late, yes, China has been trying to, and now the advent of digital currency and the impact of that on the dollar itself, I think we will have to do another session on that. But to sum up and answer your question very briefly, China does have a clout, be it via its reserves, or be it via the huge amount of exports, on which the large part of the globe and predominantly US is dependent on. And they do understand, and that's the bargaining chip that they have, so to speak, whenever trade negotiations happen. So had it been any other country, US would have embargoed and put a lot of restrictions on China, but they do know that this is not a pushover kind of a country where you can put embargoes and trade restrictions, because they themselves are dependent on Chinese flows, as well as Chinese flows, both goods and services, as well as currency and capital.
Thank you, Jay. I think we have taken all the questions so far. I think if you would want to summarize, I think one thing is for sure, I think the question on, whether China would continue to be a dominant Asian leader, I think you flouted that by saying, I think they're probably going to dominate the global business, right? It's not just Asia. Their ambitions are much larger.
Yeah. So one thing which uh, I have gathered after reading, whatever I have been able to lay my hands on, some key very good books on China, is that they don't play the game for the next 3, 4, 5 years. So they do it for 50 years, 80 years, 100 years. So their game plan, I think, to my mind, was very clear even in the early 1990s. And the fact that this one man has been able to survive 30 years under 3 presidency tells the fact that this is not that President Xi Jinping has just come over and is become very much a man in hurry, or is changing something which Hu Tao or his earlier predecessor uh, encouraged. It's all part of a larger game plan that they would like to achieve a large critical mass in terms of economic clout. And they had a vision that, uh, to become a global player and a global power to reckon with, one does not need only military power. One needs a lot of economic clout and economic power. And that is something which I think the Russians did not realize. And they are trying to play their chip now with gas supplies to Europe. Uh, Only time will say how much they will be able to succeed. But the Chinese have been very careful in their and very precinct in their longer term analysis, and they had this vision that they would want to create a, an economy which would be of a critical mass, which cannot be ignored, which cannot be pushed around, which cannot be uh, you know uh, you know uh, be pressurized by the Western powers. For all practical purposes, I think the US has given up its dreams or ambitions of liberalizing China now. So the US would want to have a good relationship with China and see that China does not expand its influence, geopolitical influence, beyond the South China Sea. But that's not the way Chinese authorities have been thinking about. If you look at their investments, be it in Africa, be it in Afghanistan for that matter, be it in other parts of the world, they have a much longer game plan. So I think uh, their uh, policies are driven by much longer term horizon of 50, 80 years of where they want to reach and achieve, and that's guided by the ancient Chinese philosophy, wherein they would want to rule the world. So they may not rule the world in a literal sense, but in practical sense, I think they already have they already are a force to reckon with, be it exports, be it the size of the economy. The only thing left probably is currency, and that's something which I think only time will say. But the CBDC, which is the central bank digital currencies, if they kind of roll out in a way that the Chinese would want to, that will kind of do away the last, uh, not refuge, but the last
Bastion.
bastion of control which the Western world uh, you know enjoys, which is their dominant currency because of historical reasons. So that is something which only time can say. But for all practical purposes, I think China rules the world.
Excellent. I hope that was a great session for all our attendees. Thank you so much, Jay, for giving time. And we'll surely send a recording to all the attendees as well. And have a great week, all of you. Thank you so much.
Thank you for having me. Bye bye.
Thank you, Jay. Bye.